Hey traders, what's going on? Jamie Saettele here. It is July 23rd, 2017. This is a SB Trade Desk special report on the US dollar. Clearly, the sentiment has completely flipped from back in January, when many were expecting the dollar to continue higher. We were looking for a top and certainly fallen quite a long ways from that point. Not saying that this low that we get, is going to be all that important. I think it probably is going to be relatively minor in the grand scheme of things, but should be a trading opportunity nonetheless. Let's first just go to some charts, review some charts that we've been, kind of focusing on for a while. U.S. dollar, the FXCM one, daily chart here going back to 2011 low. Again, just a channel here, folks. Real simple. And the median line of that channel is just below price, right? It's like 11,950 or something. So it's pretty close. Not saying that you have to stop right there. You can see, for example, back starting in 2013, that level was precise support for a time, but you did spike below it too. So, you could very well kind of spike below the line, and it wouldn't really concern me all that much as far as, is the dollar going to completely crash? So this parallel here, which actually crosses the, what is it, the October 2014 low, which is important because it's really when we started to go into the strongest part of the advance, into the rest of 2014 and of course up into March 2015. And that line is going to get you something like, basically 11.9, close to 11.900 over the next couple of days here. Actually, that'd be pretty close, I guess, to this low in September of last year. What's more interesting to me right now is DXY, though. You can see how clean, right, the former channel is. The parallel that extended off of the July 2012 high was precise support in May of last year, of course. That was the low for the year. And then you can put a parallel that crosses the January 2012 high. That's going to get you the May and July 2013 highs. And then very important price action, kind of validates the importance of this line, is, again, that's when we went into the parabolic move higher at the end of 2014 into March 2015. So that line's going to be around 93, very close to 93. The Brexit low from last year is 93.02. The May 2015 low is 93, I guess, what is that, 93.15 or something? Low 93.13. So very close to here. Now, just for math purposes, right? A drop down to, let's call it 93.15. Currently trading right here, 93.97. That'd be a drop of about 0.8%. Considering that the euro is, 58% or so of this index, just, simple kind of guesstimation here on where the euro could find its, some sort of a top. 0.8% rally in the euro from current market is 1662, puts you around 1760, right? 1760s or so. So that, is kind of an area in the euro to look at. And I'll put some charts out in the, the swing updates, of course, talking about this. But also, aside from these levels, which are clearly the most important from kind of a trading standpoint, right? We trade price after all. But let's look at, sentiment. So I keep up a number of, kind of list, if you will, of old articles. And if you just go and type in US dollar right now, news, bottom falling out of US dollar, okay, doubts about Trump's agenda seen accelerating US dollar decline, the explanation for the tumbling dollar, the dollar is plummeting. You get the idea, right? The dollar, it's literally the exact opposite of the headlines that we saw back in December 2016 and January 2017, which I'm going to show you right now. If you recall what those looked like, Fed hike puts U.S. dollar in the podium of G10 high yielders and could
It was a
push the euro.
cross-border
Oh,
acquisition
what is
of a
this?
very large.
Don't want to play that. Could push the euro below parity. All right, that was literally right at the dollar top and the euro low. Dollar climbs the strongest. Okay, actually, this way.
Preparing your family to
Not that.
receive the legacy you've built is as important.
I really hate these Bloomberg videos. Here's one.
At Fidelity,
Trumped up dollar, seen outshining all else into 2017.
With virtual reality.
Let's see. This is a January 2017 one. Re-energized looms over the rest of the world. This is the Wall Street Journal. I've said it a couple times the last few days, but what I've been looking for is a journal headline in the paper, and we haven't gotten one yet. Maybe you'll get one Tuesday or something, Monday. I don't know. Here is it, but
It was a
this is a recent
cross-border.
one. So this is literally the exact opposite of what happened or what the headlines looked like 6 months ago, right? Euro rally shows few signs of stopping as Draghi appears unfazed. Right? I mean, you literally could replace euro with dollar. Um, I'm showing you this because this is what sentiment looks like at market turns, right? Now you have to have the price right because sentiment can remain, extreme for 100, 200, 300, 400, 500 pips, right? So you can't just go and say, well, everyone's bullish the euro, so I'm going to sell it. No, you got to be really careful with this. And that's the point of, of these charts. So that's why I'm telling you 93.02, 93.15 DXY is probably mid 17, 1760, 1770 euro. All right, so we got the price down on dollar. We got the seasonals. There's an analog that's interesting too. So just stand back, do this every once in a while. Stand back and take a look at a chart with nothing on it, no indicators, nothing. Okay, and you want to is there anything that looks familiar here? You kind of get this peak, this drop, up, up, down, up, and then turn down sharply. The closest is actually back here in 93. So if we copy the price action, actually let's go a little further. Copy this price action out to here. All right, drag it over. We're going to take the high bar and overlay it with the high bar, and you can see it's a pretty good fit, right? Even the little, rallies on the way down and the way up within the decline over the last 6 months are pretty close. So my point here is if this were to continue, and I'm not predicting it will, but it certainly fits the narrative of kind of extreme sentiment and getting a bounce. My thinking is that we're in for something of a bounce, heading lower, and not getting a real low until about September, maybe late September. So keep that in mind. And if we go to the long-term charts page, you can see the seasonality charts here. And the dollar seasonals actually start to turn up, right? For a week or so. And then early August, they sour again. And lo and behold, you're dumping, from a seasonal perspective, very weak dollar seasonal, bias basically into late September, early October, which fits beautifully with this analog. Okay. So, heading into the end of July here, I'm thinking that we're probably in for some sort of a, near-term capitulation in the dollar, but it literally could just last a week or so. And then we would be going into the seasonal bearish period. I'm not saying it can't be sharp, right? It could be extremely sharp. If we were to continue on this path, where you get a very sharp bounce, as we did back in the 93 analog, you would have a bounce. We could get all the way back to really, a 1 or a 2 week high, which, would be on this low. What is that, from the week of 612? That would put you back near 96.30. And that would, probably have the euro you could be back near the 14 mid 114s in euro at that point. So, it's a fluid situation. It's certainly a work in progress, but I think it's all kind of coming together when you take the sentiment, as we've talked about, you take the really big levels in the dollar down near 93, um, that we've been looking at for some time, and then you take this analog and the seasonals, and it really all paints a picture that just kind of envisioning a sharp rally that lasts maybe a week or so, off of some pretty extreme lows from a sentiment perspective. But that rally should be sold, and then you're probably not going to get a much more important dollar low. In other words, one that lasts for several months until late September, early October, when the seasonals turn back up again. Okay. So certainly we'll be trading the market, the dollar from both sides over, probably the next couple of weeks would be my guess. But um, different currencies certainly will, be worth being on the long side and favoring the short side. I'm not going to get into that specifically in this video. Certainly Kiwi still one interests me on the short side, um, due to its own kind of sentiment, extreme and COT issues and levels and all that stuff. Japanese yen, you know, dollar yen still looks good on the downside towards the 110 figure. Um, but yeah, we'll save all that stuff for the swing update. All right, so a lot in this video. Hope it helps. You can obviously do this as well. Plot this, go back to the 93, 94 period, even into, I guess it goes into early 95, and overlay that and, kind of do some work so you know exactly what I'm looking at here. All right. All right. So Jamie Saettele here signing off, and hope you had a great weekend, everyone. All right. Take care. Bye.